The stock market just told us something important, and it wasn't about shoes. Allbirds, the sustainable wool sneaker brand, the company that built an entire identity around being the anti corporate, good for the planet alternative to Nike. Last Tuesday, they announced they're selling the shoe business, stripping their public benefit corporation status and pivoting to GPU infrastructure. They're calling the new company NewBird AI. The stock went from $3 to over $20 in a single session, 600%. For context, that's more than Nvidia moved in all of 2024. Now, here's where it gets interesting, because the GPU infrastructure thesis is actually real. Compute demand is genuinely outpacing supply. Data center vacancy rates are at historic lows. High-end GPU procurement lead times are stretching into late 2026. Companies like CoreWeave built billion-dollar businesses on exactly this problem. The opportunity exists. But NewBird AI has no deployed hardware, no existing compute customers, no infrastructure. What they have is a $50 million convertible financing facility, meaning an institutional investor agreed to loan them money that flips into equity if shareholders vote yes on May 18th. The investor doesn't need the business to work. They need the stock to stay elevated long enough for the conversion to pay off. So, what does a 600% pop on that announcement actually tell us? It tells us the market right now is not reading the fine print. It's pattern matching the word AI and buying first. That's not irrational. It worked in 2023, it worked in 2024, but it's exactly the condition where the gap between a real infrastructure play and a rebranded shoe company disappears until it doesn't. That gap is what Fund AI Mentals exists to close. Subscribe because the deals that matter aren't always the ones making the loudest noise.